everyone, welcome to another session on dollar INR. This time I'm going to start with crude, Brent crude, then I'll come to dollar. Okay, so this is the Brent crude prices. Remember, this is on a daily frequency. Multiple times I have shown a 4 hourly frequency, but this is the daily frequency to catch a slightly longer term horizon. Okay, now all of us, really good news that it has cooled down. Okay, the war in the Middle East is looks to be coming to an end, and we have seen the crude cooling off. But very interesting, see, after this cool off, where has it found a support? Okay, multiple days, 5-6 trading days, it has found a support. If you look at this chart, look at this region. Okay, this is the region where the price broke out. Okay, it was on this particular day that the war started, and then we saw a breakout of the prices, and there was a gap formed between 73 to 75. Okay, $73 to $75 to a barrel. That was the gap that was formed on that particular day when the war started. Okay, and prices obviously went higher, remained at high levels, and when there is a ceasefire, the prices have come down, and it has found a support exactly at that gap area. Okay, so the way it looks like, we might not see a big downside on the crude from the levels of around 73, 75, 77. Okay, that range of $3-4 is where the support for crude lies. Okay, now let us come back to the dollar INR. Okay, now I want to show you how the dollar INR is behaving. Now, just like the crude has come down, the rupee has also recovered, the dollar has fallen. Okay, but look at these dotted lines. Okay, this blue dotted line is the 50-day moving average, and the orange dotted line is a half percentage filter just below the blue dotted line. And if you look at this chart, both these lines have been very good indicators of support region. Okay, it found a support here. Okay, it found a support here. Okay, very rarely is the dollar INR price coming below that support region of 50-day moving average, and its half percentage filter below the 50-day moving average. Now see how beautifully the prices have come to that support region, and in the last 2 days we have seen a slight uptick of the price of the dollar INR price. It has held between that 94.20, 94.50 support region, and it has slightly come higher. Remember, this support is important because we have been following this linear regression channel. Okay, this linear regression channel for a long time, and this region of 94, 94.50 is both validated by this linear regression channel. This also is coming at this level, as well as the 50-day moving average. So multiple support indicators at around this region of 94, 94.50. Okay, so the dollar importers, please watch out. This is the level to buy. Okay, now let's come to the final figure. Okay, I want to show you something else. Okay, this is a chart which shows the option premium for an ATM option, and at the money call and at the money put. So option premiums will be the same. Okay, strike price equal to the forward rate, and this is for various months, 1, 2, 3 and 4, different colors for various months. Now if you have seen the option premium, when the war started, the premium had surged higher, because obviously a lot of uncertainty, the option premiums will go higher. But then it came lower when war subsided, again went higher when it escalated, but now see how the option premiums have come down significantly. Now what does that mean? That means that if I buy a 1-month option, at the money option, whether it is a put or a call, the cost is just around 57-58 paisa for 1 month. Okay, and if it is for 2 months, it is around 79 to 80 paisa. Remember, option premiums have come down significantly. See where they were earlier and see where it is now. Okay, so now since option premiums are cheaper, and it is a lower cost, it makes a lot of sense to do vanilla options. Okay, so we saw in the dollar INR chart that the levels at around 94, 94.50 are very good for dollar importers to hedge. So dollar importers can hedge using forwards and vanilla options also, specifically since the option premiums have come down. Okay. Now dollar exporters have got multiple levels to hedge because rupee has been weakening. So you can wait for a while and target 95, 95.50 levels to resume hedging using forwards. But if you are getting nervous that a lot of inflows might come in, RBI is relaxing FCNRB regulations, ECB regulations. If you are nervous that a lot of inflows might come in and rupee might gain a bit, then it's more sensible to do dollar puts rather than doing dollar forwards. Okay, so dollar importers hedge using forwards and options both at current level around 94.50, but dollar exporters at current levels don't hedge at all using forwards. You can use vanilla puts if you are nervous, but take it from me, I think rupee might feel a bit more of pressure. So if it goes to 95.20, 95.50, resume doing forwards and options both. Okay, so that is it from my side. Have a great evening ahead.